All right, so we continue with the Introduction to Financial Management. This is from the book itself of Essentials of Corporate Finance by Ross Westerfield Jordan. Albeit the 2008 version, it's a bit outdated if you must ask me, because if you look at books, usually the research that comes into it is about 10 years, right? So basically, if you see a 2008 book, it means that it was written starting in 1998, right? And so you will see that in the cover of the book, there's even a mention of an iPod content available. So, the big thing during those times is the iPod. All right. So this basically missed the whole financial crisis thing. Plus, of course, the pandemic, which just happened last year, right? But let's just fill in the gaps as we introduce financial management again. So, key concepts and skills. We have to understand the basics of financial management decisions and the role of the financial manager. Now, let us take into mind that when we say financial management decisions, it doesn't always mean that we are talking about accounting. Okay, so we talk about a whole array of things to decide on, and it will be clearer as we proceed. And when we say, again, when we say financial manager, it doesn't always mean that this guy is a CPA. All right, especially in the US, when you talk about financial management in the US, you are even more it is even more usual to see a financial manager who is a non-CPA. We even consider CMAs are the one as the ones who become controllers in, of course, in private companies, right? Publicly traded companies, yes, right. Governments, of course, it will be CPA. But for private companies, publicly listed companies, small and medium enterprises, it may or may not be an accountant or CPA. But of course, mm, since we are situated in the Philippines, where the market still favors CPA, then you can intertwine the two. You can interchange the two and look at it from the direction of accounting. All right. So that being said, and that aside, we continue. So we know we will try to know the financial implications of the different forms of business organization. This is almost always the first topic. We talk about a business organization and what kind of structure the organization is. Of course, the goal of financial management, we spoke about that in the beginning, but let's deal with it again. Understand the conflicts of interest that can arise between owners and managers. Yeah, that's a big thing. As a student, you may not understand the value or the the weight of conflicts of interest. But as you proceed in life, especially if you are already working, you will see that it's a big thing, and a lot of companies are so touchy with it. So much so that in the first, even at the first instant, the doubt even of a conflict of interest can already drive you to extinction in the company, a corporate extinction, or what we call a forced resignation, so to speak. Okay, I'm just reaching out for my thing here. Okay, so yeah, so those are key concepts and skills. So we will take a look at finance and the business finance and the financial manager. As we said, the forms of business organization, and then we will take a look at the goals of financial management. and the agency problem and the control of the corporation. Then we speak with financial markets and the corporation. Okay, so basic areas of finance. We have corporate finance. Of course, we have investment. Corporate finance talk about more or less the internal operations that align with the financial management. Investments, we have that. We will talk about that at length. Stock market, bonds, other forms of investments. Um, yeah, financial institutions, of course, banks are here. Mutual funds, investment houses, all that. International finance, it will be beyond the scope of our topic, our course, but international finance will be dealt with as you proceed to higher courses. International finance, yeah, we'll speak about that in terms of the way our banks, for example, or financial institutions deal with the companies worldwide, and how, for example, a change of very basically, the change currency exchanges and standard cost, standard exchange is being uh, dealt with, as we proceed to the global marketplace. Okay, so investments, we work with financial assets as stocks and bonds, as I explained a while ago. This is a basic understanding, basic work of finance, working with financial assets, stocks, bonds, government bonds, also corporate bonds, right? Mutual funds, uh, and other investment packages, or uh, because there are other investment packages that we may think about. Like now we have the REIT, we have the PERA, and all that. PERA plan, right? Anyway, the value of financial assets. We will also talk about risk versus return, and then asset allocation. Yeah, especially when we talk about portfolio. And then, yes, we have job opportunities for financial managers, stockbrokers, financial advisor, as much of that now, portfolio manager, as I spoke about, for portfolio manager among stocks uh, or investment vehicles. Like you can have mutual funds that align with you can have portfolio that align with mutual funds that are balanced, like 50-50, or maybe it's a pure equity thing, maybe it's an aggressive portfolio. Yeah, you can also have security analysis. I remember the book of Benjamin Graham, Security Analysis. Benjamin Graham is a CPA. Yeah, I guess. Yeah, I think so. He's a CPA, and he is the teacher of Warren Buffett, Warren Edward Buffett, one of the most successful investor of all time. So he wrote Security Analysis, Benjamin Graham, and in that book, we were given the valuation techniques, discounting cash flows, all the stuff that you learn now in accounting are based on that. Even the aging of receivables and asset valuation. Like if you have a receivable, is it collectible still? How many months, how many years has it been unpaid? Are the interest still moving? And then you assign a value to it. So most of the accounting reports, the reporting that we do here now, trace its roots from that book, Security Analysis. So a security analyst can also be like that. Like, for example, if a company is trying to buy, or is aiming to buy a certain company, certain other company, and of course the assets are declared, right? And if the company is going to buy based on the asset, then at the beginning it will be bloated. If of course it will always be bloated. Unless you will have a close scrutiny on that company. So that's where the security analyst comes in. He would look at individual assets, right? Building. Uh, when was it acquired? What are the additional improvements that the company did for the building? Maybe you will even give a fair valuation of the property, the land where it stands, and considering everything, right? How about receivables? As I said, the aging of receivables. What would be a fair allowance for bad debts that you can have to attach to the receivables, right? And sometimes the due diligence takes a lot of time, and it really goes even to legal battles, right? Like there are scrupulous companies that would pad the assets or receivables even, right? And then for those receivables that are way beyond collection, they would make it look like it is moving, paying some interest, but in reality, it's not even moving. It's a fake payment or something like that. And so a security analyst takes care of that, the due diligence. Okay. What else? Financial institutions. These are companies that specialize in financial matters. As I said, banks, of course, come in to your mind first of all. Banks, we have commercial banks, we have investment banks, we have credit unions, savings banks, and savings and loans, right? In our scenario in the Philippines, uh, most are commercial banks, and the big ones are universal banks. Universal banks are banks that can deal with uh, can offer additional services. Like they can go into insurance, they can go into real estate, uh, yeah, all those stuff. Uh, Most of our big banks are universal banks, by the way. BDO, BPI, Metro Bank, most of the big banks anyway. And then commercial banks, uh, very staple. The staple services of a bank is done by commercial banks, and we don't have investment banks here. Usually, the investment is taken care of by commercial banks and universal banks. Okay, we have savings and loans. We have savings banks like PS Bank is a savings bank. BPI Family is a savings bank. What else? Yeah. Mutual Monte de Piedad there used to be a time. I don't know whether can you still see Monte de Piedad now? I don't know whether in other places like in Davao or Cebu, Visayas, if there are still like that. But Monte de Piedad, I think was it closed? I cannot remember anymore. But they used to be a credit bank. A bank that gives loans to small and medium enterprises, tricycle drivers. I remember back when I was still living in San Juan, Metro Manila. There's a big Monte de Piedad, savings and loans. And I don't know whether it was bought by another bank. I think that's the last thing that I learned. And the problem that they went through is the so-called DOSRI account. DOSRI means DOSRI. DOSRI. DOSRI loans are loans extended to directors, officers, staff, and related instruments. So when I was working in the bank, I used to report that every quarter in Central Bank. But after I left, I know that it became monthly, and then eventually it was a report that you should always send to Bangko Central, because there have been a lot of problems with those three loans. Because if a bank is used by directors, officers, staff, and other related instrument, then that would be a problem, because that means the bank is using the money, the float of the depositors' money, in order to fund or finance their own business. So that would be a problem. Of course, insurance companies, financial institutions also. Insurance companies now, insurance is merging with banks and investment houses. So that's why now um, uh, insurance companies also offer investment packages, whereas before it's not the case. So insurance companies, and then brokerage firms. Of course, there are investment houses. There are the ones that offer you mutual funds as well, and all that, right? Okay. Yeah, there's a lot of job opportunities in places like this, especially if you are a graduate of financial management or banking or accounting. Yeah. So international finance is an area of specialization within each of the areas discussed so far. It's usually the same, but done in the global landscape. So that's how it is. So it may allow you to work in other countries or at least travel in a regular basis. Well, of course, that's prior to the pandemic. And it still is the case now, especially if you are working with places like World Bank. Those are nice companies where you can be like, this one, practice international finance. Also ADB, Asian Development Bank. Hong Kong and Shanghai Banking Corporation also, although it's based in Hong Kong, but it does regular researches, especially in the field of finance, entrepreneurship, and all that. Another one is Citibank, right? Citibank NA. Offshore banks that are heavy into international funding. Of course, UN, because of IMF and all that. Those are international finance corporation. So you need to be familiar with exchange rates, yes, and political risk. That's why if you really want to go abroad, earn a lot of money, you will have to look at countries that Americans or British, and Europeans don't like to go to. But these are usually places where there's a bit of political risk. Yeah. Uh, Instability of politics. And, well, the pay is high, but it's a bit risky to be there. Yeah, you also need to understand customs of other countries. You have to speak foreign languages. Uh, Fluency is helpful, very helpful, especially if you go to places where there is one recognized language, but there are many dialects, like in India. That's a problem. Well, of course, they understand you, but there will come a point wherein you will be lost in translation because of so many dialects. In Japan, there is a difference with the business or boardroom language, boardroom Japanese or Nihongo. And then there's a street Japanese, and there's the common, informal Japanese, Nihongo, which you cannot use, especially if you're speaking with a businessmen. So for me, if you will ask me what are the languages that I need to consider learning, especially if you're coming from the Philippines, of course, English is number one. If you learn English, then at least you will already conquer 50%, 60% of the world. You can get by, all right? If you want to be fluent in other languages, then I would suggest Spanish is easily understood in at least 600 by 600 million people all over the world. If you speak Spanish, then there are words that you can understand also in Portuguese, and you know, so you can get by there as well. So the whole of South America would be okay for you, and Spain, and yeah, and other Spanish speaking countries, Mexico, yeah. Okay, what else? Uh, Arabic. Arabic is easily one of the most underestimated language. But if you learn Arabic, then you would have conquered a lot of Middle East countries, and some countries that are that the with religion with the Islamic religion, countries where their main religion is Islam. Okay, so that's pretty helpful for you. Here in the Philippines, of course, Japanese is important, although it's just Japan, but that is the language of manufacturing. And if of course Germany also is helpful. um, Yeah, so German language also helpful, especially now that they are actively seeking employees. If you are a nurse or engineer or finance guy, maybe not an engineer, because Germans would insist in hiring their own people, especially in engineering. They trust their own engineers. But at least if you want to work in their workplaces, in their factories, then German language is also good. French used to be so important before, right? Because it's the language of international politics. But now it was replaced by English. There used to be a time before I think it was the 50s or 40s. Now, not so much anymore. Right. Now, if you want to understand BTS, then of course, our K-pop language and Korean is also important. It's going to be important for you. Why study finance? First of all, marketing. You talk about budgets in marketing, marketing research, marketing financial products. You will not be able to speak eye to eye with the marketing people if you don't know, uh, the way they understand their marketing stuff. So while with finance, you're always insisting on the bottom line. Okay, what is this? What will we get out of this? Marketing people, they don't understand that immediately. Some of them would just know. Some of them would just say, how can we sell products if you are not giving budget for marketing? Of course, our language in finance would be, I understand that, but I want to know how much will you be producing from this budget, because we want to see the ROI. So you have to meet halfway. You, of all people, should understand how to speak with marketing people. Marketing people does not go beyond the effort of marketing sometimes, and they don't understand how to do the forecast. So you should help them do the forecast so that they will understand that for every money spent on marketing, it has to return in some form of investment. So that is the reason why you have to study finance. Especially from the perspective of marketing. For accounting, dual accounting in finance function, preparation of financial statements is finance. For management, strategic thinking, job performance, profitability, personal finance, of course, for budgeting, for retirement planning, we speak about that. People in the US would spend a lot of money for college. That's why for them, education, college planning is important, and the day-to-day cash flow, right? Yeah. Okay, so if you have questions, please write them down and put them as reply to the discussion page in Canvas. Or you can also put a comment in this video so that we will tackle them again next time. So business finance, some important questions that are answered using finance. What long-term investment should the firm take on? So this is one of the things that we tackled the first time around. So it's always uh, understood from the perspective of finance. So be prepared to answer these kind of questions. So long-term investments. What long-term investment should the firm take on? So in most companies, and especially since not a lot of people are into investments or business, finance, when asked by this question, or sometimes the question is just glaring in your eyes, like if you have a cash flow of over $10 million and it's unused and it's in your cash, it's earning 1% yearly, or in our case, maybe in time it's in time deposit earning 2%. It's not enough, right? Inflation is at 4% and you are being paid 2%. So now the boss is asking you, or sometimes it's not just the boss, you yourself are asking yourself, where do I put this money, $10 million? So this is a long-term investment decision. Of course, if you put it in equity fund, and the equity that you chose plummeted, then there goes your $10 million. And that's why a lot of people in controllership in the finance don't really choose stock market. So the way you go about it is to look for options and research them one by one, and put in a portfolio of sorts, so that you don't put all your eggs in one basket, right? So, and then you choose the most profitable of all. So maybe if you have $10 million, then you can choose maybe about five uh, prospects, right? And then you put weight on this in terms of risk. Okay, this is the high side, this is the low side, this is the medium. Okay, this is the so-called aggressive view, this is the conservative view, and this is the moderate view. What would be our optimum loss? What would be our maximum gain? So those are considerations for finance. We'll talk about that more when we go to decision analysis. Sorry. Okay. Where will we get the long-term financing to pay for the investment? So now in this case, you don't have the money, and then you want to put to put the investment in. How do we get to this? How do we get to a cash surplus of this, put it in investment? How do we finance that, right? So that is also a question in finance. Or maybe it's the other way around, how do we plan for the surplus? Okay, if the surplus is like this and you don't return it to your investors, okay, where do we put them? Okay, 10% goes to this, 15% goes to this, 30% goes to this. So those are investment decisions. How will we manage the everyday financial activities of the firm? Okay, that's a cash flow. That's an operational decision, but it's a finance decision nevertheless. Because if your cash needs, escalate, and you don't have enough cash, so what do you do? All right, you've placed a lot of money in investments, but if you suddenly need them, how do you get it immediately? Of course, your investment return will be penalized, all right, because you suddenly exited the market. Or what do you do? Do you borrow from the bank, maybe pay a little interest? Okay, so those are the considerations. So that's why when you do this, you have to be sure that the cash flow is in place, right? When I say cash flow is in place, it means that at least for the next 3 months, you won't have any problem, serious problem in cash flow. Okay, financial managers try to answer some or all of the questions, especially since you are the financial manager, all right? So usually you have a team, or if it is just a small company, then you'll be the one to decide, and you have to put it into a document, and let them decide, but there's a documentation. Okay, so this is the analysis that I have. If we go here, this is the optimum gain that we have. This is the neutral. Should the economy go sideways, this is what will happen. If it goes below our expectation, this is the worst loss that we will be getting. If we gain, this is the highest gain that we will have. So all those data should be given. Okay, the top financial manager within the firm is usually the CFO, usually the Chief Financial Officer. Depending on the structure of the corporation. Usually the treasurer is also the CFO, but sometimes the CFO is not part of the board, right? So there's a treasurer on the board, but then the CFO does not is not part of the board. Maybe it's just an employee, and he reports to the board. So sometimes that's the case. But within the firm, that's why the discussion here is within the firm. So within the firm, there is the CFO. Okay. Sometimes the CFO is also the controller. Sometimes the CFO has the controller under him or her in his department, and then there's the accountant, right? And again, some companies have it slash slash. The controller is also the accountant. Uh, uh, yeah. So usually, it's always mm, safe to have a check and balance. No, if not, then you will have run into problem. Then you put in a lot of auditing and controls in order for you to more or less balance the thing out. So the treasurer oversees cash management, credit management, capital expenditures, financial planning. The controller oversees the taxes, the cost accounting, financial accounting, data processing. These are these are so-called delineation of job, right? Excuse me. In some corporations, as I said, these are all handled by one person. Okay, so financial management decisions, we have the capital budgeting, we have the capital structure, and working capital management. So for capital budgeting, what long-term investment or project should the business take on? So capital budget, we need to put in money there, right? If you work on a project, you have 3 or 4 projects. Of course, you need capital on that. So these are long-term investment or project, and the decision is always, uh, you know, uh, based on the returns and the amount of money that you have to put in. Capital structure, um, uh, you look at your working capital and um, uh, the kind of things that are there. All right, so like how many percent of the capital is the liabilities? Okay, how many percent of the capital, or the liabilities and capital, is the corresponding fixed asset or liquid assets. So you have to look at that and consider, because sometimes uh, the assets that you are going to buy, for example, will always come from your money and the capital that you need, right? So that's why the question here is, how should we pay for our assets? We have equipment coming in. So is that cash? Is that going to be credit? Should we use debt or equity? Should we use debt? Should we loan from the bank? We're we're building a racetrack for our driving school. Okay, should we borrow from the bank? Look at the interest rate, long term, and then look at the long term return. Is it enough? Okay. If it is enough, how about the inflation rate? Should you continue to, should you put in inflation rate? What would be the value now? What is the present value now? What if the inflation rate goes as high as 6%? What would happen? Right? So those are the consideration for this. Working capital management is, of course, the day-to-day management of the firm, cash flow usually, and how would you get by in the day-to-day operations? How are you able to pay your suppliers? How are you able to pay your employees? Okay. So now we go to the forms of business organizations. So as in the US, especially, well, the US starts it all. Of course, we base our structure from the US, but in the Philippines, this is also the same. We have sole proprietorship, the same with the US. Then we have partnership. Okay, so there is a general partnership, and then there's a limited partnership. You will speak about that in your other subject. But our aspect of discussion here talks about the financial part of it. But of course, there's some connection there, so we'll see that later on. Okay, corporation. There is such a thing as S corp, in the U.S., and then the limited liability company. In places like England, there's even the limited LTD, which is what we're talking about here, right? But in our case, let's just speak about corporations in general. Ours is a bit simple, but now they are trying to align it to international understanding, because we're running into problems, especially if there are foreigners who's trying to invest in our local companies. Okay, so sole proprietorship, of course, the advantage is it's easiest to start. Same here in the Philippines, least regulated. Yes, single owner keeps all the profit. Taxed once, yes, it is taxed once as a personal income. So you declare that as your personal income and you are taxed once. Okay. The disadvantage is that number one, it's limited to the life of the owner. If the owner dies, then the sole proprietorship is gone. You cannot transfer it. So that will result in some estate computation. And eventually, the wife continues, or the children continues. But if the death is sudden, then that would be a problem. Okay, equity capital is limited to the owner's personal wealth. Of course, he cannot put in more than he has, and that is the reason why it would have a limited capital. Unlimited liability, yes, because if the corporation comes into, if the sole proprietorship, the company runs into a problem, then you get sued for it. You get sued, and it goes beyond the asset of the company that you have it, because your own asset comes with it. So, for example, knock on wood, you are running a transport company, and then the transport company has something like 10 million pesos of uh, asset, right? And then one of your trucks went haywire in SLEX, killing a lot of people, all right? And you are now bound, because of gross negligence, you are now bound to pay. The example that I was doing, I think I was disconnected. The truck went haywire in SLEX, and it killed a lot of people. And so your final bill came out as something like 15 million pesos, paying all the damages and all that. So the company will be sued, and the company clears the 10 million, but it needs to pay 5 million more, right? So what would you do? What would they do? They will run after you because you're the owner, and you will still pay extra 5 million. So that means your liability is not just um, you know, confined within the asset of the company. So that's the problem. It's difficult to sell ownership interest. It's difficult to sell. If you have a company like that, of course you cannot sell it because it's named after you. So it's hard to put it on sale. If you have ownership interest, like if the company owns a building, the building belongs to you as a person. So therefore, maybe you will sell it in your own person, but not the company's company's interest, right? Or what would you do? You would stop the company from operating, and then you sell, right? So it's hard, really. And also one more thing that I think should be added here is that most companies here in the Philippines, right? They don't like to transact with sole proprietors. You know, I'm having a hard time getting a business if your receipt bears sole prop, like RG Atento, sole prop. So you will have a harder time getting businesses, especially if your business is with multinational corporations, big companies. So it's harder. But if it's just selling retail, it will be okay. Okay, partnership. We have the advantage. We have two or more owners. Of course, you can divide the work among yourselves. More capital available. Relatively easy to start. Yes, as long as you agree, it's easy to start. Income tax once it's like personal. It's like sole proprietorship in the sense that you are taxed once. Okay, the disadvantage is, of course, again, unlimited liability, even for general partnership and limited partnership. The same with sole proprietorship. Partnership dissolves when one partner dies or wishes to sell, or if you have a disagreement, wala. I mean, the whole partnership is dissolved. And the same with sole proprietorship, it's difficult to transfer the ownership. So for me, it's really a toss-up between sole proprietorship and corporation. What is the advantage of a corporation? Limited liability, that's number one. The corporation, if you will look at the corporation code, it takes into itself a juridical personality. It becomes a person, the corporation. So it owns, it has the right to transact, to sue, and to be sued. So if you put the asset of the corporation is 100 million, that's the only liability that you have. Unlimited life, especially now, I think they changed already the corporation to, we'll put that as one of our assignments, okay? The corporation code was already revised, and you can opt to start with something like this. In the US, it's already like this in 2008. But in our case, the original corporation code, the life is initially 50 years, right? And then you make it to another 50 years and all that. But I think we already changed it in the current corporation code. By the way, the first corporation code that I was talking about is the BP 068, which is Batas Pangbansa. It was written during the time of Marcos, long time ago, but it was already reformulated, reenacted, or there's a new corporation code. Okay. For another advantage is the separation of the ownership and the management. You can be the owner, and then other people are managing it. The transfer of ownership is easy because it's just the shares of the corporation. If you have 100,000 shares, you sell the 100,000 shares, then you're out of the corporation already. It's easier to raise capital because you can just issue shares. Of course, the disadvantage is uh, there's agency problem if the management um, if the ownership and the management is separate, if you are not part of the managing team, and sometimes you run into a problem because they are agents of the corporation, and sometimes they make decisions uh, and they represent your company, right? So if you are part of the board, sometimes the board will just meet, I don't know, every quarter. So imagine the trouble of doing all that. You do your meeting every quarter, and you know what's happening already. And if the company run by your managers take into uh, a decision, make decisions that are eventually become detrimental to your company, it's harder to uh, to resolve that. Of course, the resolution there is be part of the management also. You cannot just rely on agents or other people to manage your team. Sometimes the manager also owns shares in the company. You don't put management, especially top management, in your firm if they are not owners. Double taxation. Why is it double taxation? The corporation is already taxed. And then if you have, of course, it's corporate rate. Like in our case, I think 35%. And then if you place dividends, you get the dividends personally. You are also taxed at the personal rate. If the dividends is high, then you get taxed initially 35% and then another 35% because it's uh you know uh it becomes your income, right? So that's double taxation. So goal of financial management, what should be the goal of the corporation? Of course, first goal may be maximize profit or minimize the cost in order to maximize the bottom line. Maximize market share, that can be maximize the current value of the company stock, especially in the US. This is a big thing because the stock price is usually multiple of the earnings. So really it becomes, it really multiplies your wealth. Does this mean we should do anything and everything to maximize owner wealth? Is that the goal of management? So that could be a consideration. So now we have the Sarbanes-Oxley Act, the SOX. This came out because of the many things that are happening in the world of finance, all the cooking of accounting books. And that's why they came up with the Sarbanes-Oxley Act. So the agency problem, the agency relationship, the principal hires an agent to represent its interests, and then the stockholders, which the principals, hire managers to run the company. This is the one that was talked to you about a while ago. Sometimes there's a conflict of interest between the principal, the stockholders, and the managers that they hire to run the company. Especially if sometimes they don't do due diligence, and then they hire managers that are eventually become spies to other companies, and then other companies waltzes in your company, takes over the ownership of your company simply because of managers that have conflict of interest, and it happens usually. So how does that happen? Especially in big corporations that are trading in markets, in the stock market. If the management continuously do decisions that would be detrimental to your stock price, and the stock price plummets, and then comes in, the hostile takeover of other companies, uh, and then you realize that your managers are mere spies, right, of the competitor. So that sometimes is a problem. Another, well, of course, here you will look at the difference between management goal? What is the goal of management, which is the shareholders, the real managers, all right, the principals, and then what would be the goal of the management that are hired by the stockholders to run the company? What is the goal? It has to be aligned. How about the cost? Sometimes the managers put in a lot of so-called golden parachute. If you look at the Enron, the corporation of Enron, see, they exited the company long, long before the shareholders did, and they came out with tons of millions of dollars, while the shareholders ended up with nothing. So that's really a conflict of interest. Managing managers. This is what I was telling. First of all, there's compensation. Incentives can be used to align management and stockholders' interests. Sometimes they put options, stock options that are that can be utilized after 2 years or something like that. So what happens is this. So they give you stocks, okay, shares from the company, maybe 1,000 shares, 2,000 shares, and you can only exercise that. Exercise means you can only transact it, sell it, put it into your money, or maybe put more. Exercise the option 2 years after. So that means you have to stay in the corporation for 2 years. Now, in order for your option to go higher, then that means you have to put in all your efforts to make the stock price of the company higher, right? So these are the things that companies are doing to manage their managers. Yeah, so that's 1 and 2 already. Corporate control. Again, I was talking about the threat of a takeover. It may result in better management. If the company uses its control properly, then you don't really need to worry about a hostile takeover. Other stakeholders can jump in and provide management also, right? And also sometimes they make use of what we call the white knight. White knights are usually friendly, outsiders that act as your knight in shining armor, white knight, in order to save your company from being taken over by hostile forces. So the reason for that, maybe you don't understand the word that I'm saying. A company can be taken over by by outside forces. If the prices of the company goes below, lower and lower and lower, an outside force can buy in the stocks, buy it from shareholders, and since it is listed in the stock market, they can just offer like a 15% uh, upward you know if for example the company stock is selling at 100 pesos, they can offer at 115 or 120 even. And if the shareholders know that there's something wrong with the company and the stock price keep on going down, and then suddenly there's a person here offering a premium over the price, maybe 10, 15, 20%, some people, especially the public, who knows nothing about what's going on in the company, they would start selling their money, their shares. So what would happen is a mass exodus of the shares, and it's now being taken over by an outside force. That is really the reason why your company stocks are plummeting in the first place. So because of that, sometimes the company makes use of what they call white knight. White knight are outsider even, and they have a lot of money. Warren Buffett is always considered as a white knight. They would come in, make a bid that's higher than most, and they know that if the white knight is the one that takes over, then they're still in good hands and they can recover anytime because this guy doesn't really need to control the company. So Warren Buffett is a guy like that, and maybe I'll let you watch a film or two about him, and the way white knights work. So example, the web. The internet provides a wealth of information about individual companies. This is really the truth. Excellent site is the Yahoo Finance. Yes, I make use of that. Although there's a lot more now. Bloomberg, in the Philippines, you have the PSE, the Edge, right? Okay. So what is the meaning of this? This is the total value of the firm's asset. The firms invest in asset, current asset, the fixed asset. And then we have the total value of the firm to investors on the right side. So this is the hard asset on the left side. On the other side, the total value of the firm is the value that the outside investors are willing to pay the firm's assets. So a good example of this, figure 1.2, is Microsoft. Microsoft is the owner of Windows. Catapulted Bill Gates to being number one for many, many years. Of course, he was already overtaken by Jeff Bezos and now Elon Musk. But for a time, he used to be on the top, richest man in the world because of Microsoft. Okay, so Microsoft, and not only Microsoft, we talk about Microsoft, Google, Facebook. These are companies with good assets, hard assets, but not as high as how they are valued. So here, if you will look at the assets, just the mere assets, computers, they don't value as much. But since they are developing software, that could easily go as high as 10,000 times the value, right? So the financial market would attach a higher value on the asset of the company. Okay? So the difference between that is what the value looks like from the investor's point of view. Of course, the financial markets think of a value attached to it. Plus, you have the debt, the, the liabilities of the company, the equity share. Those are uh, analyzed by the company, by the investors. So this is the flow. The firm issues securities to raise cash. Okay, they issue securities in order to raise cash. The firm invests in assets, so the market gives you the money, and then they invest in assets, maybe hard assets and all that, human capital, and then the firm's operation generate cash flow. Okay, so they earn money, so they generate cash flow. They pay taxes. Okay. Other stakeholders may receive cash. Okay, there's dividends, debt payments. They also pay their debts to other companies, okay, or other parties. They reinvest cash flows into their company. It grows. Cash paid out to investors in the form of interest, and sometimes the capital, as I said a while ago, the capital, the financial market, capital, the intrinsic value of the company, the market value of the company increases, and therefore the financial markets recognizes that. So it increases. Of course, in it can go the other way, wherein the firm issues securities, the firm invests in assets, but in despite the investment in asset, instead of growing, the company shrinks. So what happens? The company loses money. So if the company loses money, of course, this is negative. They cannot reinvest cash flow, so it shrinks. They pay the government taxes, that is a given, debt and taxes. And what is given back to the debt is payment. They cannot escape that. But the equity shares does not grow. In fact, it shrinks, and therefore the financial market is affected. investors grow tired of the company, they sell their shares, and that's why the shares plummet. So those are the consideration in the drawing. Okay, this is like the economic perspective of the firm and the way it connects with financial markets. Okay, so we talk about that, the cash flows given to the firm. Alright. So we also talk about primary and secondary markets. Primary markets mean the stock market. Then there are other markets, dealer and auction markets. We don't have that here in the Philippines. There are even commodity markets. There are companies that are listed, but there are also over-the-counter securities. But in the Philippines, it's not like that. In the US, there's the New York Stock Exchange, which is the main market, the primary. NASDAQ, there's no physical market. It's just technology, usually technology stocks. So usually the companies listed here are the ones that are more into tech. Dell, Microsoft before is here, Facebook listed here, and other tech companies. Okay, quick quiz. All right, so let's try to answer them. What are the 4 basic areas of finance? All right, so what are the 4 basic areas of finance? Can you remember? Pause the video for a while. Maybe search in the presentation. So the 4 basic areas of finance. Are you ready? Okay, maybe you answered that. Just write it down. Put it as a reply. Maybe it's part of the assignment. You'll not be able to see the answers of your classmates. Number 2, what are the 3 types of financial management decisions and what questions are they designed to answer? It's easy just to go back to the first part of the video. What are the 3 major forms of business organization? Yeah, same in the US, same in the Philippines. What is the goal of financial management? What are the agency problems and why do they why do they exist within a corporation? So those are the things that we need to answer as part of our asynchronous activities today. Okay, so again, if you have questions aside from the things that I place here, I know that most of the things here may come as a bit of a shock. There are things here that may be a little high for you to understand, but just keep on listening because later on you will see that oh, it makes sense now. I'll also ask you to watch some value films. I let you watch some value films that may help you in understanding the things that we talk about here. So again, if you have questions, if you have comments, insights, please do so. I wish to hear from you in a sense that I wish to understand where you're coming from and what are the things that you're understanding the way share with you the insights. Please share with me your insights as well so that we'll be able to put it in the next discussion. So please keep safe, guys, and I hope that we get out of this predicament that we're in the soonest possible way so that we'll be able to see each other in the near future. If not, it's okay. We're just going to go with the flow of life and take every day as it comes because in the end will be better if we accept the things that are in front of us, the reality of the moment, and value of the things that are happening before us. So I hope that you make the most of what we do and what we share, and I hope to be able to share more with you in the next couple of months and semesters even. Um, so that's it. Thank you very much. Keep safe, guys. Bye.